Thanks for loading up this LTAG technical analysis question and answer video. In this video we're going to look at the importance of always having an alternate scenario, something that can act as a backup in case your predominant and your main view is not the correct view. Let's have a look. In most walks of life, whenever we're making a major decision, we'll normally have a number of choices and we'll choose between one and the other. It always surprises us at LTAG that when it comes to investments and analysing investments, people perhaps have a single view of what may happen, and we try and teach our clients that it's really important to have alternative scenarios mapped out. I'm going to illustrate that today with the share price of Auto Trader, and we're looking on TradingView, and we've got the Auto Trader chart up on the weekly view. As always, the green bars are prices going up, red bars prices coming down. And let's have a quick look at this and see some things that stand out on this chart. You will see some horizontal lines across the chart. These lines are called support and resistance lines. You can see here there is a point, low point here, there is a low point there. In technical analysis, you draw a line across those two because you can see that the price, at least here, has bounced off that level and gone back up, as it did here. It bounced off that level and went back up. I'll explain this drop here in a few moments. Similarly, we've got another a line here which I would classify as resistance. So the price went up to here but couldn't go any further. It went up to here, couldn't go any further. In fact, it did it once, twice, 3 times, 4 times, 5 times in that period. And the way that you draw these lines is you always pick the first two and then draw across. And we potentially have another line of resistance here because this is a high point. So this is the highest point in price for some period of time. So that's potentially another point that we need to bear in mind. So those are the lines there. This drop here was the beginning of COVID. So Auto Trader, clearly as soon as we had COVID set in, people became extraordinarily fearful about what was going to happen in the economy. Everybody stopped thinking that cars, at least second-hand cars, would be bought. And then the whole thing turned around. In fact, people needed cars and needed more cars because they were working from home and they weren't taking the train or public transport into the office, and so the demand for cars went up. Also, there was a chip shortage in and around that time, and you couldn't get a new car for love nor money, and second-hand prices went up, but also the demand for second-hand cars went up. So Auto Trader benefited significantly in that period. So we had what we would call a breakout at this point, and so the price broke down a potentially historic trend and went down, but then sharply reversed. Here the price went up, it reached a peak which it had reached previously, it couldn't breach it. There was a subsequent breakout and a larger breakout until effectively the price came back down and it hit the same level of resistance that there was at this point, or shall we say support, and it's bounced off that. So we can sort of understand what's happening here. There was, you know, a shake-up of sentiment. The sentiment turned around, and now as we go through this economic crisis that the whole country is in the whole world, people are a little bit uncertain as to whether or not they need cars or not, and so the price is relatively in a flat region. So the question is, which is more likely? Will the price continue a trend downwards that has begun here? So that's illustrated with the red line, and whenever price goes down, as you can see, it goes down, back up, or in this instance down, back up, down, back up. And so if the price were to drop, you would expect it to drop. People would think that that's enough, they'd buy more, but then they'd buy more up until the point of previous resistance, which is this middle line here at 610p. So the price would drop, the price would go back up, probably to resistance, it would bounce off that and to continue down until it met the previous support as per these 2 points here, and at around 485p it would probably bounce back up. But that would be one scenario. Equally, you could say that the price has breached this level, it's dropped below it, in effect tested it, and so the next move may be upwards to a degree, then back down to retest it again, and then back up to the previous all-time high, at least on this chart. So there you can see that you have two alternative scenarios, both of which are fundamentally plausible, at least at a superficial level, without some more detailed understanding of AutoTrader as a company. But from a chart perspective, there are two alternative scenarios. I've done it in a fairly extreme fashion. I'm not exactly sure that the fundamentals would support my perspectives that I've just described, but simply to illustrate the necessity to have alternative scenarios so that if one or the other begins to happen, so for example, if we began to see a price up towards this move, up towards this point, we would know that this scenario isn't in play, but this scenario probably is. So as with anything, time is a great educator, and as time goes by you become clearer as to which is the direction, and then as that direction begins to stabilize, you can have an alternative scenario moving from that point onwards. The main point being, don't be blindsided by only one point of view, always have at least 2 points of view. At LTAG, we try and teach our clients to be broad-minded, to have multiple points of view and to be as widely researched as is possible, so that those points of view are based in some form of substance. And then a technical analysis then supports that, so that you have all available information to make a wise decision at your fingertips. Hope you found this useful, and I look forward to chatting to you in our next Q&A video.